Welcome to Trading Lounge and the US indices report with trading levels and Elliott Wave, and starting with the S&P on the monthly chart here, and we're looking at cycle degree here from wave 3 to 4 to 5 here, and then primary degree in this particular structure here. The thing here is quite interesting really, because this here also is an expanded flat correction as well, where the market just takes out the top here and then takes out the low here as well. So that's kind of what we're looking at here in this little third and fourth wave in here. So from 4 to 5 here, we've got 1 and 2 and 3 and 4 and 5. So this was a bit more predominant in some of the other markets, like the Dow actually. So in this scenario here, from wave 4 to wave 5, we're counting 5 waves up in here. So going into the weekly chart here, so from this wave 4 here, we've got 1 and 2 and 3 here, and then we've got an A and a B and a C here as an expanded flat correction, just dipping the top out here and taking the low out here in this case here. And we're also looking for 5 waves down here in this particular structure. So just moving into the daily chart here for a moment. So we've got wave 1 and 2 in play, so we're looking for wave 3 to come down, 4 and 5 to complete C of 4 here, and then a move to the upside here. If I'm totally wrong with all this, that will still be the same pretty much pattern. If we bring this wave 5 and put it in here, then we have a top in play, then we'll still have 5 waves down here, but when we get to this point, we'll only have 3 back up, and then we'll be going down again. So that will be in case I'm wrong, but we'll get to that when we get to that. In the meantime, we're looking at this here, and our focus is on this 5 waves here. So on the 4-hour chart, drilling in here, let me just bring this into 200 here. This is an alternative count here, and I want to, it's probably not the case, because the NASDAQ is basically leading to the downside, but this is a count that's in the Asian market. So this is what we're looking at in a lot of the Asian markets, with 1 and 2 and 3 and 4 in here, and then coming down for 5 here. So we'll just keep aware of this once this low comes into place here. But otherwise, we'll go to the hourly chart, where we've got this as wave 5 here, wave 1 here, and so on. So in this count coming down here, as you may know, we've got wave 1 and 2 here, and 3 here, and 4 here, and 5 here for this. And then we've got let me just get rid of this here, that's a bit messy. So then we've got an A wave, a B wave. This is actually a triangle pattern in here, but that's okay. We still end up with our B wave into this space here, and then 5 waves up here for C. It hasn't reached at 61.8%. Not that it has to. Wave 2 could pull back 40%. It could pull back 80%. But on average, we look between the 50 and the 62% here. So one of the tricky little things here, it's probably not the case, but from this low here to this high here, the 61.8%, 62% is coming back in on this support here, which in terms of the trading levels is the midpoint, the 2750. So all these are sub levels from 2700 to 2800. 2800 is a minor level, so we have major levels, medium levels, minor levels, and then the sub levels. So the sub levels between 27 and 28 here are the Fibonacci numbers 1, 2, and 3, then 5, then 8. We call 1, 2, and 3 group 1, the midpoint at 50 here, and then group 2. With group 2 at number 8 here, we bring in 72 and 65 is a bit of a group there. Quite an important little group. We know that the the support here at the midpoint at the 61.8% here is holding. So the alternative count for all of this particular structure, just why we're here, if I went to the 2-hour chart to explain that, it would look a little bit like this. So wave 1 here, an A wave here, an A and a B and a C wave here, sitting on support here at 2750, and then moving up in 5 waves for wave 2 here. I don't think that's the case because the NASDAQ will be moving a bit lower, leading to the downside, but it needs to be pointed out. So we could say here also too that when the 2750 becomes the retested resistance, then we know that would be going down from that point. So that's the alternative count, but once the midpoint, the 50, becomes the resistance, then we'll be on our way to the downside. Now we do have a short trade in here at this particular point, so we can bring the stop down to this area through here. Okay, that will save the situation if the market moves up. Now the next safe short trade would be at 2750 as a retested resistance, so a move down, back up, move down through here, retest it here, and then move down. So on that reference point low here, when it comes in, you won't know it's in until it starts retesting the midpoint, but you'll see it once it's matured, and then that would be your entry point here. Otherwise you can just short in here further, but this would be the better one, safer one at this particular point here. I've counted this a little bit differently than the last time, and that last time I counted is still valid, and that's what's on our charts in the website as well. But this is an alternative count that also counts quite nicely as well here. So if I go to the tick chart here, I'll have to squash in a bit more data here. So from wave 2 high here, it counts down nicely as wave 1 and back for wave 2 here. And then from here it counts down as 1, ABC for 2, 3, 4, and then 5 waves here. So we can look at this as wave 1 with 5 waves in it, wave 2 here, wave 3, 4, and 5 here for wave 1, and then A and a B and a C back here for the 61.8% retracement level of wave 2, and then moving down here lower. I've also got grayed out here as an A and a B and a C wave for a B wave here, and then a C wave up here. So we do need this 27 breach here. It's going to take a little bit of time because even when this market still comes down, it's still going to be moving back, and it'll need to move back up again as well. So we can see all these are impulsive waves to the downside, so that's good. If you wanted to keep in a tighter stop, we can always just take that high here, that low here, and the 61.8% would come in at this level here, so 27.85. So we could say that, you know, even if you're short now, that if the 27.85 became the support, then you need to be out of the short trades. Okay, but be patient because the market can still come back up into the 50-60% area here before moving down, because we've got an impulse wave here, we've got an impulse wave here, we've got an impulse wave here, so we can expect this to bounce back here. So it's going to, this can move down further into the 2750 area here, or a bit closer, and then it won't go back up as much as that. It'll only come back up to the 72. If it comes down to the 50, it'll come back to the 72 area here. This is where the most volume has been traded, and move down from that point. So the NASDAQ is much same. So on the 4-hour chart, in this instance here, I like it because in this instance we've actually come back up into the box, so it's kind of satisfying that we've actually sort of, it felt like you've reached the target, you know. The same problem still holds as well, as all of this being up here as an A wave and a B wave to this point, but you can see here that this grey box here is the 50 and the 61.8%. We can see that it's really, you know, knocking on the door here. So it's likely to pop through here, which will give it that bearish signal here. So we can look at this as 1 and 2 and 3 and 4 and 5 here. We could also count that differently as well. But once it hits the 7,000 here, it's also going to bounce as well, isn't it? So we'll need to accommodate that scenario. In this case here, you could take part profit in this little section here, and that would give you a little bit of breathing space at that point as well, enable you to breathe, because there will be a bounce off the 7,000 area here. And yeah, so I've also brought the stop down to break even too on this particular point through here. And also we've got the 72 area here. So if you're reasonably confident, then don't take part profit here. Then we'll also look to add on once the 7,000 becomes the retested resistance. But the normal classic trading levels pattern is the move down, a reaction in 3 waves, not sure how high that will go, and then the market will move down, and then it will come back and retest it. If you're looking at the futures market and you've got volume, then what you want to see here, because that will become the reference point low here, you won't know that's a reference point low until that starts to retest, but this move up here should be on lower volume than the move down here. That's how you know that it's corrective, and that's when all the indicators will give you divergence and those sort of things. So it's really based on the volume. So and then move down from here. So you want to be adding at this point here. So if I can just copy that and put that in there, that will save that. Of course, you can get in and out anywhere you want, as long as you know what you're doing. So in a nutshell, it's always support and resistance are really safe ways to move forward. You know, they're like walking down the stairs. This was resistance, wasn't it? Or support rather, sorry. And then it's resistance over here now. So the 72 is a really important number for the trading levels in lots of different ways. I won't go into that at the moment. The good news is, though, that this move up here is corrective. So at some point, this low is going to be taken out here. So, you know, why get out of a trend when you're on the right side of it at the right time? So, but anyway, I'll let you dance with that scenario. The Dow Jones, we'll have a quick look at that as well. Let me bring that into play here. I won't always be looking at this. I mean, it's just the same as the other market. So it's a bit of a cross-reference between the S&P and the NASDAQ at the moment. And the reason for that is that you know that the NASDAQ is really knocking on the door down here at the 61.8% mark here. Same pattern here. So this could also be construed as an A and a B and a C wave to here, and then up for 1 and back for 2, and then 3, 4, 5 here to get that other pattern that we were talking about before, with the A wave here, the B wave here, and the C wave over here with this over here. So we just need to be mindful of that. So if you're short, you still need to keep the stops just above here for the time being, but we should expect that to move down from there. But it's just good to be aware of this other count in this particular space here for this. Let's just check out the 50-60% retracement level. So we're between the 38 and the 50 here. We're not even up at the 61 yet. So we've got some markets that higher moved up high. Because this hasn't moved up high, if this does move down here further, then you know this is one of the weaker markets and probably one of the better ones to short. If I just flip through to the weekly chart, maybe, oops, it's not the weekly chart. Just get in a bit more data here. So yeah, I mean, this here is an expanded flat correction too in a wave 4. So the A wave here, the B wave up here, and the C wave down here. So, you know, it takes the B wave takes the top out, the C wave takes the previous low out. So that's the kind of pattern in this third, fourth wave where expanded flats occur, is what we're looking for in this particular space here. So market takes out top here, only just. Market should take out low down here. That's what we'd be looking at here. This is also the medium level here, 25. So if I go to the daily chart here and bring that back into perspective here. So the 25 is the part of the trading levels. It's a medium level here. So really at the moment, it's just always natural. This is just natural to see the market come down, bounce off this in a corrective wave, which it has. And there may be more to that corrective pattern, but eventually that's going to move down here. Of course, there'll be another bounce here, but eventually it'll move down through here and retest that, and then that's the setup on the other side here. But it's also nice, what I'm trying to do is trying to build in positions just generally across the US markets with a few positions up here with the view of adding into this stronger third wave coming down here. Alrighty, thanks for tuning in. Cheers.